So you're self-employed, but you want to buy a house. You met with your accountant and you realized, I don't want to pay that tax bill. Because if I pay this giant tax bill to show enough income to buy the house I need to show, there went my down payment, right? Now that's what so many self-employed individuals are experiencing when they go to buy a home loan, because of how high not only state taxes are in many states, but federal income tax on S Corps and Schedule Cs and other types of businesses that flow through directly to your personal tax return. So many times people have been like, what do I do? You know, I don't want an 8 or 9% interest rate on a hard money loan, and I just can't prove my income on my tax returns without paying such a big tax bill that it just completely wipes me out. I got a solution for you, and I'm going to explain it to you. Bank statement programs have been around for a long time, but as of within the last 90 days, some really cool changes have been rolled out here that we can offer at Modern Lending. And I just want to explain to you exactly how it works. So follow me here. First, there's a couple things you need to know to make sure that you can even qualify or apply for a self-employed business bank statement loan. Starting with number 1. You must be self-employed with the same business for a minimum of 2 years. No exceptions. So if you started your business in July of 2017, as long as you're applying for that loan of July 9th, 2019 or beyond, you're good. No exceptions, and must be the same business. Okay? Number 2, most bank statement programs require a minimum of a 700 FICO score if you want to look into low down payment options. Now, if you have a large down payment, which most people don't have, you can go much lower. But for a 10% down bank statement program, 700 credit score is that minimum option, right? And then thirdly, you must put your business deposits from your customers in the bank. Meaning, you can't just be receiving a bunch of cash and then throwing cash into the bank. You must have customer deposits, meaning checks, wires, transfers, credit card deposits must go in to one main bank. So you need to go into one particular account. So meaning if you have $30,000 a month in business deposits and you put all those deposits into the bank, you're great. If you get $20,000 in cash, you put some in your safe, put a little bit in the bank, you need to change the way you do things and making sure that you're putting all of your deposits into one main operating account. Okay? So now I want to explain to you guys how it works. Okay? So now, when you're doing a business bank statement program, you basically, what you're trying to take is, you're trying to pull out and derive income based on deposits. Okay? So let's start with a scenario, in a very common scenario. Say you want to buy a house and you want to put a minimum of 10% down. 10% down is the minimum down payment on any bank statement program, which is fantastic because in previous years, say 10 years ago, this was 20, 30% down. So it's getting very, very, very low compared to what you're at. So let's say we have a business and that business is a plumber. And we have our plumber and he puts in every month into his bank a total of $60,000 a month in customer deposits into his bank, right? He owns a pretty good sized plumbing company. Now, he put $60,000 a month into his bank. So at the end of the year, he had a total of $720,000 in deposits. Okay? Traditionally speaking, most bank statement programs will do some type of calculation off of this income and usually will give somebody only 30 to 40% of that income to be usable income. And it really prevented people from being able to actually qualify for a home. Now, all you will need is a letter from your accountant or tax preparer that states, hey, their business, outside of any discretionary spending, meaning outside of marketing or outside of owner withdrawals, any of those types of things, has an expense ratio of, let's say, 30%. So what that means basically says, hey, you know what? Our fixed costs are about 30% of our revenue that come in. No tax returns needed, nothing else. Simply a letter from your accountant. It doesn't need to be some audited financials that state what your expense ratio is as a comparison of your total revenue. So let's say in this case, we're going to go ahead and we're going to say we're roughly dealing with about a 30% expense ratio. So 30% expense ratio, okay? So just for easy math, we're going to call this roughly about $220,000 in annual expenses, leaving him $500,000 in annual income to be used to buy a house. To give you an idea, this is a real scenario. This particular plumber that I'm doing, when I came to Modern Lending and applied for us to do a loan for, he, on his tax returns, wrote off all of his income and wrote all of his income down to less than $100,000 a year to avoid paying taxes. Obviously, he wanted to go out and buy a $750,000 house. He could not qualify for a $750,000 house showing just $100,000 a year on his tax returns. So he was super frustrated, had talked to his bank, and they told him, hey, you need to show $350,000 in income to qualify. Well, $350,000 in income to qualify because of the different car loans he had a rental property, he had other types of expenses. That was going to be a $180,000 tax bill between Fed and state and all these other options that he had. He was like, I can't buy. I cannot come up with $180,000. There's no way. So he was super discouraged. Came to Modern Lending. We reviewed everything on his numbers, and we're able to give him $500,000 in annual income to easily qualify. Now, you're like, well, what was his interest rate, right? Now, just for very simple reasons, typically speaking, interest rates on bank statement programs were always extremely high, extremely high. What I could say in this case, he had great credit, and with 10% down, his interest rate on this program was only about 1.5% higher than if he would have actually gone ahead and filed the income on his tax returns. Only 1.5% higher. So 1.5% higher, which basically on the loan was equal to roughly about $700 more a month in his case. And you're saying in your mind, oh my gosh, $700 more a month. That's way too much. No, it's not. Think about it this way. We saved him, by structuring it this way, $200,000 in income taxes that he would have had to pay to show enough. Why? Because on a jumbo program in this case, you would need to show 2 years of tax returns. So he would have to show 2 years of tax returns showing this much income. Over $200,000 more in federal and state taxes he would have had to claim to qualify for that same property. $700 a month, let's call it $10,000 a year of a tax deductible, mind you, you can write off your mortgage interest, tax deductible interest. Look at that number. He would have had to be in this mortgage for 20 years just to pay back in a higher interest than what he would have had to pay to the IRS. Don't you think he was pretty happy? He was beyond ecstatic. What do you mean I don't have to sit there and write an extra $100,000 to the IRS this year and, exclude certain expenses I was going to have to, not write off to make my income appear in a certain way? He was ecstatic. We were able to basically convert the amount of money he was depositing every single month into a qualifying income and give him still a great interest rate. We're not talking about a 7, 8, 9% interest rate by any means whatsoever. So it's super important to understand when you're self-employed, there is fantastic options out there nowadays where you can truly just use bank statements based on the amount of deposits that you have being shown coming in and applying a reasonable expense ratio that you're just getting from your accountant. It's not some preset number, and get a lot of income, still get a great interest rate, and get into that home that you're looking for with only 10% down. And that goes all the way up to $1.5 million loan amounts. And you only need a 700 credit score, own the business for 2 years, and make sure you're depositing your money in the bank. Hope that gives you a much better and clearer understanding of exactly how bank statement programs can save the day and get you into your home when you want to buy that dream property without giving away everything to Uncle Sam.